Is my voice audible? Can anybody confirm? Am I audible to everyone? All right. So few people are not able to hear me. So in case in future, if you are not able to hear me, please exit the meeting and then you rejoin. Okay. All right. So you can see Nifty is 100 points gap up, and then Bank Nifty is 300 points gap up. So let's see. Whichever I am personally using. All right. So what we are going to do in this webinar, I hope I'm audible to everyone. So what we are going to do in this webinar is I will be trading and I will be teaching you all the strategies whichever I am personally using. Okay. So what you have to do is you can observe, you can take notes in your diary or your notebook, and don't try to take the trades whichever I am taking. Okay. So the because my risk management will be totally different, my position sizing will be totally different. So don't think like I can take the trades whichever I'm. Don't think like I should take a trade when SAR is taking, so that I can recover the webinar fees, so that I can make huge profits. Don't be in that mindset. Okay. So all the 5 days, try to observe whatever I teach, whatever I trade, and don't try to replicate my trades. Okay. So this webinar is completely for educational purposes only. So throughout the 5 days, what we are actually going to do is we are going to we are going to learn all the profitable strategies whichever I am using. Okay, we will talk about Dow theory, and we will talk about moving averages, We will talk about CPR. We will talk about candlestick psychologies. Okay, and then we will cover both swing as well as intraday trading. Okay, we will talk about candlestick psychology, and then we will talk about swing as well as day trading, and then we will talk about high probable entries where you can go with higher position sizing. Let's say you can deploy 50 to 70 75 percentage of your capital, and we will talk about low probable trades. Okay, those who are listening, please, you can take notes in your diary or your notebook. So we will talk about low probable trade where we will deploy less than 25 percentage of our capital. Okay, so these are all the things which we are going to go throughout the 5 days. Okay, so it will not be completely training, it will not be completely trading. We will balance both. Whenever we get a proper entry, we will take the trade. Okay, and I'm not an aggressive scalper. Okay, I'm not an aggressive scalper. I'm not an aggressive trader. Taking 10 trades in a single day, taking more than 5 trades per day. I'm not an aggressive trader. Okay, I'm a conservative trader. I take trades only when my entry is achieved, only when my setup forms. Okay, so you cannot see me trading for more often. Okay, this is my style of trading. All right, so we will be covering all these throughout this 5 days. Hope you all will be happy with my webinar at the end of the 5th day. Okay, and from 11th October, from 11th November till 25th November, 15 days, you will have the access to this 5 days, entire 5 days recordings. You can go through that in this 15 days. Okay, you can take necessary notes. After 25th November, the course will be auto deleted. All right. So I hope with this small intro, we can get back to the session. So generally, this is how my platform will be looking like. Okay, you can see. Yes, so you can on the left hand side you can see 5 minutes chart. So this is 5 minutes chart with daily CPR. Okay, this is 5 minutes chart with daily CPR, and then 20, 50, 200 moving average, and this is hourly chart with weekly CPR, and then there will be 20, 50, 200 moving average, and this is daily chart with monthly CPR, and then 20, 50, 200 moving average. So 20 is represented in green in all the time frames, 50 is represented in red color, and 200 is represented in black color. So you can even take notes of this so that you will not ask me again and again tomorrow or day after tomorrow. Please don't ask me what is that black color, what is that 20, what is that red color moving average. Please don't ask me the basic settings and everything. So this is how my chart layout looks like. 5 minutes chart with daily CPR, hourly chart with weekly CPR, and daily chart with monthly CPR. And moving averages are constant across the time frames 20, 50, 200. All right. So colors I'm using in moving averages, I'm using 20 green color for 20, red color for 50, and black color for 200, so that it will be easy to identify. If I am giving different colors in all the 3 time frames, then it will confuse for me and it will confuse for you. So whenever you see green, it is 20. Whenever you see black, it is 200. Whenever you see red, it is 50. Okay. I will request you to follow the same color code, because tomorrow or day after tomorrow, if you are asking me doubt by sending a chart, it will be easy for me to identify the moving average. If you are using pink, blue, and some other color, orange, it will be difficult for me to identify. Okay. So you also follow the same color code, so that if you ask any queries to me, it will be easy for me to understand the moving averages. And for all the CPR resistances, there will be green color only. All the CPR resistance you can see green color. All the CPR support levels you can see red color. So whenever the candle goes up, it is bullish. So I have used green for all the resistances. Whenever the market comes down, it is bearish. So I have used red for all the supports. So this is daily CPR in blue color, weekly CPR in blue color, monthly CPR alone I have kept pink color. Okay. So that's all about the settings. So now trading view has restricted only 2 indicators. Okay, only 2 indicators. So it is sufficient. You can use CPR one indicator and moving average another indicator. So whatever you have learned so far, you might have learned about RSI, you might have learned about super trend, Bollinger Band, volume, open interest, whatever you have learned earlier. I want you all to forget. Okay, I want you all to forget whatever you have learned earlier. I want you all to focus on whatever I am teaching. I want you all to focus on price action trading. So what we are going to do today is price action trading. So first tab is Bank Nifty. The second tab is this one is Nifty. This tab is in Nifty, and the third tab is in Fin Nifty. So whichever gives me opportunity, we will make use of it. But primarily, I will be taking trades on Bank Nifty only. Nifty and Fin Nifty will be like it's like a confirmation. If Bank Nifty goes up, I will be confirming whether Nifty is also supporting. And if Bank Nifty goes down, I'll be checking whether if Nifty is also supporting. Okay, but I will not take decision in Bank Nifty based on Nifty. Okay, now let's say Nifty is going up. Okay, let's say Nifty is going up. Now I will not take a call option in Bank Nifty blindly. Okay, I will not take call option in Bank Nifty blindly. I will check whether Bank Nifty is bullish, and based on Bank Nifty setup only, I will take a long position. Because of Nifty, I will not take a position in Bank Nifty, and because of Bank Nifty, I will not take a position in Nifty. Please understand. Okay, I will just check whether Nifty is supporting, whether Nifty is bullish. In case if I am taking a call option in Bank Nifty, I will cross check whether Nifty is also bullish. If Nifty is bearish, now let's say if Nifty is coming down, and if Bank Nifty is going up, then I will not take a call option in Bank Nifty also, because Nifty might pull down Bank Nifty also. People who are bullish in Bank Nifty, they might turn bearish because of Nifty. Okay, so this is one point. Again, you can note it down in your diary. And this is our FIAS terminal. So let me refresh it. So this is my FIAS terminal. So on the right hand side, as usual, you can see moving averages and CPR. And this is 5 minutes chart. Okay, this is 5 minutes chart. And I'm looking at the futures chart. I'm looking at futures chart in FIAS. And on the left hand side, there will be options chart. Okay. Now, right now, I think Bank Nifty might come down. So let me open the options chart on the left hand side. So let me open at the money strike price. It is trading around 213. So I have taken Bank Nifty 43,600 put option. So this is how my FIAS terminal will be looking like. On the right hand side, there will be futures chart, 5 minutes. And on the left hand side, it will be options chart. Okay, so this is options chart in 5 minutes, and this is futures chart in 5 minutes. All right, so this is how now if Bank Nifty is bullish, immediately I will change the strike price. I will just change the strike price to 43,600 or 43,500. Okay. So just like that, on the right side, right layout will be constant future start. The left layout will be changing constantly. Right. So, and now for this mentorship program, we are going to start with the standard capital size of 10 lakh rupee. Okay. My overall capital for trading is 1 CR, but we will not have 1 CR in our trading account. Okay. That's how we plan our money management. So, out of my 1 CR overall capital, the only 50% will be in my trading account. Okay, across my trading accounts. Now, this is one of my trading account, and here I have deployed 20%. Now, 50% of 1 CR would be 50 lakh. Now, out of this 50 lakh, 20%, that is 10 lakh, is deployed for intraday trading in FIREs. Okay, this is dedicated for day trading. Now, another 20% is deployed in another FIREs account purely for swing trading. Okay. And another 5% is kept as a reserve. Okay. It is kept as a reserve. So this is how we plan our money management. Okay. So this money management practices, this one is as suited me personally, and it gives more emotion balance. Now, if you are seeing, let's say you are a day trader and you are primarily focusing on option buying, and if you are seeing 1 CR in your capital, there are higher chances that you might deploy your entire 1 CR capital. There are higher chances that you may get some emotional imbalance. So these kind of money management practices helps you to keep your emotions under control, and it helps you to focus properly on having some realistic expectations. So for this mentorship program, as usual, I will be using my intraday account with 10 lakh capital. All right. So that's all about the intro about the layouts. Now I am having a bearish bias in Bank Nifty. So Bank Nifty is having a narrow CPR in 5-minute chart. You can see over here, so it is a narrow CPR, and then now the candles are trading around R2 levels. The market has given a gap up opening. Now, always remember, this is a very basic thing in technical analysis. Whenever the market gives a gap up opening, no, or gap down opening, it is actually not good for any trend, whether the market is bullish. Now, if the market is bullish or if the market is bearish, gap up and gap down market is not at all advisable. It is not at all desirable. Gap up and gap down is not needed in the market. Gap up and gap down market is not needed in the market. So now again, just have in mind that gap up and gap down market is not needed. It is like a dangerous, it is something injurious for bullish and bearish trend. Why I am telling that is, if the market is going up, it should go in a structured manner like this. Instead of going like this, if the market is going like this, gap up, then what happens? There is something called as imbalance. No, there is no balance in the move. So what happens? At some point of time, there are higher chances the market can reverse and come down, or this bull trend will be, this bull trend will be like a physically challenged. Okay. This bull trend is like a physically challenged. It's not good for the healthy trend. It's an unhealthy bull trend. Okay. So a healthy bull trend should be like this. Unhealthy bull trend should be like this. Sorry, a healthy bear trend should be like this. If the market is giving gap up and if it is going like this, then you can call it as a unhealthy bull trend. And if the market is coming down like this, giving frequent gap down, then it is a unhealthy bear trend. Okay. What happens in an unhealthy bear trend? No, the getting proper entries and exits will be difficult. Why we are calling it as an unhealthy bull trend and unhealthy bear trend is the entries and exits will be very, very difficult. Okay, entries and exits will be very, very difficult. That's the reason we are telling unhealthy bull trend if there is a gap up and unhealthy bear trend if there is a gap down. Right now, you can see on the daily chart, I feel as per daily chart, 20 SMA looks like it's providing some resistance for the bank Nifty. Okay, let me draw a line at 20 SMA as per daily chart. So around this particular level, 20 SMA in daily chart is there. So it looks like it is providing some resistance. Now, as per daily chart in Bank Nifty, you can see 20 and 50 are in a falling mode. 20 is below 50 SMA, right? 20 is below 50 SMA. So whenever the candle goes up, 20 will act as a resistance. There are higher chances the market will come down. In case if the candle breaks 20 on the upside, there are higher chances 50 SMA will act as a resistance and then the prices might come down. Okay, that's what happened over here. That's what happened over here. The market came down after taking resistance exactly at 20 and 50 SMA. So once again, I feel that daily 20 may provide some necessary resistances and unusual gap up market. I feel the market should come down. Okay. So let's wait. In case if the candles are coming below R2, I am planning for a short position. Let's wait and let's decide. See, more than, in case if you are having any queries, no, everybody, in case if you are having any queries, you feel free to post it in the chat box. Whenever you come across a question, please post it in the chat box. I will answer when I am free. Don't expect answers immediately, since I will be busy in teaching you and I will be busy in watching the market and taking trades. So don't expect immediate answers. You keep posting your questions continuously. I will answer once the market is range bound. Once I am free, I will answer it. So don't hesitate to post your questions. Keep posting your questions. So just now we discussed that 20 SMA in daily chart can act as a resistance. That 20 SMA line you can see in 5 minutes chart also. No, that 20 SMA line you can see in 5 minutes chart also. So once you can see R2 level over here, with the green color dotted line you can see. I hope you can see that. I hope it is visible. No, so R2 line is over. R2 is over here around the 43.512. So once the candle comes below R2, I am planning to take a short position. Mahesh, 20, 50, 200, we are using 20 only simple moving average, not exponential moving average. simple moving average. 20 is for green and 50 is for red and 200 is for black. See, future is for looking at the trend. Okay, future is primarily for looking at the trend. And here I'm using futures because options premiums are moving based on futures. That's the reason I'm looking at futures on the right side layout. Options premiums are moving based on futures. Now I'm planning to take put options in Bank Nifty 43,600. 43,600 should be ideal strike price since it is in the money. So now this candle is almost closing below R2 and a complete rejection candle. I think we can go for entry. Let me start deploying with 10 lots. Remember, in a gap up market, no, the market is gap up, but still we are going for a short position. So we have to be very careful in our position sizing. No, we should not rush into the trade by placing 100, 200 lots. So we have to be very careful in deploying our capital. Position sizing should be carefully deployed. So right now I have taken 10 lots. If there is any good retracement or any good opportunity, I'm planning to increase more. Once the trade is completed, I will try to explain what is my understanding. As I said earlier, 20 SMA daily 20 is resisting the candles. That is one good understanding. So now my target would be my target for this short position would be at least R1 and previous day high, as well as 5 minutes 20 50 SMA. The candle has not broken the first 5 minutes candle. It might reverse. See, first 5 minutes candle, there are higher chances it will reverse from the first 5 minutes candle also. That's why I have not gone. That's why I have not increased my position sizing. Okay. Now here, if you look at my positions, I have deployed only 10 lots. Okay. I have not deployed 100 lots. Okay, I don't want to miss this bear candle close. Okay, the stop loss for this trade would be above a green candle above R2 would be my stop loss. A green candle above R2, closing green candle. If there is a green candle closing above this R2 like this, then I will exit my trade. I hope it will not come. And in case if the first candle low is broken, now, in case the first candle low is broken down, I would plan to increase my positions as well. And right from the opening, the number of bear candles are more compared to the bull candles. Okay, there is only one bull candle so far, whereas we have seen 5 bear candles. Nifty is taking support at our R3 level. Bank Nifty is trying to take resistance at R2 level, whereas Nifty is trying to take support at R3 level. See, generally I exit the trade manually. Okay. Very rarely I place the stop loss. In case if I get any phone call or any other important work, then I place my stop loss. Otherwise, since I am sitting full time, no, it's easy for me to close the position. Okay. Otherwise, I will add it in the basket and then I will close it. In case if I'm taking more than 100 lots. Right now in this trade, no, the difficult thing is Nifty is taking support at R3. Now let's see if the candle rejects R2 in Bank Nifty. So right now the premium has not decayed, so it's looking good. R2 seems to be rejecting Bank Nifty. Once the trade is completed, I will give a detailed insight about this trade. Okay. Candles are above daily CPR, candles are above weekly CPR, candles are above monthly CPR. But why I have taken a call or put option? Okay, I will give a detailed insight once the trade is over. So don't worry. All right. So once again, it has rejected. So let me deploy another 10 lots. So right now we are sitting with 20 lots. Okay. So this is how we gradually increase the position sizing rather than going in a full go. See, regarding stop loss, I will give a explanation, Itesh. Okay, please remember me later. I will give some detailed explanation about the stop loss. So the first trade we took around 225, and the second trade we have took around 243. Now our average price is 235. So if I get anywhere between 50 points in options in Bank Nifty, that is a good trade. So I'm planning to close this trade if I get anywhere between 40 to 50 points. So Nifty has broken R3. So that's why Bank Nifty is also trying to fall. So Nifty has successfully broken daily R3. So there are higher chances Nifty should come down towards daily R2, right? So let's see. So I have to be ready to close my position also in case if it goes wrong. Nifty is trying to sit above R3 and Bank Nifty is trying to sit above R2. Let's see. Once again, the candles are rejecting. So let me try to wait in this trade further. I will try to accumulate if the candles are good. So this trade is purely based on candlesticks as well as daily 20. So let's see. Okay, we will exit this trade. Yes, we will exit this trade. So once the trade is not in our favor, then we will exit. So the underlying concept for taking this trade is daily 20 acting as a resistance. So now we will take our next trade very carefully. As I said earlier, please keep posting your queries. Whenever I'm free, I will answer it. Okay, now the candles are above all the three moving averages. No, all the three CPR levels. As per 5 minutes chart, the candles are above daily CPR, and as per hourly chart, the candles are above weekly CPR, and as per daily chart, the candles are above monthly CPR. Now, in this case, why we are taking a short position? See, remember, if the market has to go up, always remember, in case if the market has to go up, there should be a support from the moving averages. Okay. Now let's say, now what can we say? Now, even though the market is above daily CPR, weekly CPR, and monthly CPR, there should be some support. Without a support, how? Without any guidance, how the market can go up? Now, that guidance, that support is provided by the moving averages. Now, let's take any 5 minutes chart. No, a 5 minutes chart can go up only with the support provided by 20 and 50 SMA. In case if it is above daily CPR. Okay. Now, let's take 2nd November. On 2nd November, what happened? The candles are above R3 level and R4 level. But how can it go further? How can it go further above R4 without the supports of 20 and 50? Now, right now in the morning, if you see the candles are not anywhere close towards 20 and 50 SMA. What I am trying to tell is the candles should be closer to the 20 and 50 SMA when it is in an uptrend. Whenever a stock is in an uptrend, the market should be closer to the moving averages. Only then the uptrend is likely to continue. Now, in this case, the candles are too far from the 20 and 50 SMA. And by the time the candles reached 20 refused to act as a support. And by the time the candles came towards 50 refused to act as a support. And that's why we saw a gap filling happening on that particular day. So whenever a particular stock is going up, now in fact you can take previous day also. The candles, if you look at the candles, no, up to this particular level, no, there is no proper uptrend. In fact, it is a range market. No, the premiums also will not increase. The premiums will not increase if you are taking any trades inside this range. So if the candles are bouncing from the 20, there are higher chances the uptrend is likely to continue. If not, the market should bounce from 50. Only then the uptrend is likely to continue. If the candles are not bouncing from 20 and 50, then it is not going to be a proper uptrend. Right? So there is no use in trading above daily CPR if the 20 and 50 are not allowing the candles to go up. In short, the candles should be closer to the 20 and 50. With the help provided by the 20 and 50, the market should go up. So the 20 should be going up like this, and the 50 should be going up like this. And then the candle should be taking support like this, and then it should go up. Only then the uptrend is likely to continue. But if the candles are not, but if the market is not taking support at 20 or 50, if the market is breaking 20 and if the market is breaking 50, then what happens? It should be falling towards the daily CPR, and in fact, it can fall up to 200 SMA also. So that's the idea we took a short position. The market is trading above R2. How it can go up? Now, even now, the market will not go up. We exited our trade since it is above R2 for a safer side. We exited our trade. But even now, the market will not go up. For that, we are not going to reverse up. The market is closing above R2. So let me take a call option. We will not reverse the trade. Immediately, we will not go for a long position. The idea for taking a short position is in daily chart, 20 is already providing the necessary resistance. You can see over here, 20 was acting as a resistance. And then the candles came below R2, and then the candles are not, the 20 and 50 are far away from the candles. So what happens? The candles should come down to take support or guidance from the 20 and 50. In fact, even in hourly chart, any time frame, without the resistance provided by the 20 and 50, the candles cannot fall down. Okay. And without the support provided by 20 and 50, the market cannot go up. Understood? See, for Sankar Reddy, for analyzing the trend, you should not look at the futures chart. Okay. Right now, I am explaining everything in spot only, not in futures. If you are confusing with the moving averages in futures chart, if you are confusing with the CPR in futures chart, am I explaining in futures chart in Bank Nifty? No, I am not explaining in futures chart. Futures chart is there, that's all. Futures chart is there, that's all. If you want, I will remove futures chart. I can trade even without futures chart, no issues. The point should be you should not get confused. Now are you happy, Shankar Reddy? Okay, so don't confuse with spot and spot as well as futures. Always your analysis, everything should be from spot only. So now here you can see the Bank Nifty took resistance from 20 and 50. It came down. Bank Nifty took resistance from 20. It came down. And here Bank Nifty took resistance from 50 and then it came down. And here Bank Nifty took support from 2050 and then it went up. Got it? So if the market is going up, it needs the support from 2050. And if the market is going down, it needs the resistance from 2050. All right. Same way for daily chart also. The market came down because 20 and 50 are acting as a resistance. And here the market came down because 20 and 50 failed to act as a support. Now here 20 SMA was acting as a support. Though 20 is below 50, 20 was acting as a support. So here I am expecting that 20 should act as a resistance. So have you understood? Now if the market has to go up, then it needs the support of 5 minutes 2050. If the market has to go up in hourly chart, it needs the support of hourly 20 and 50. Got it? Understood? Everyone? Everyone understood or not? This 20 and 50. So now the market is not having any supports of 20 and 50. That's why we went for a short position, anticipating that candles will take support at 20 and 50 in 5 minutes. Now, this is a risky trade. Now, let's say if the candles are taking support at 20, that will be a good trade because 20 will act as a support. Now, let's say the candles are taking support at 50. That will be a good trade because the 50 will act as a support. But taking a trade against that, I am expecting that the market will take support at 20. So I went for a short. This is a risky trade. Taking a trade at 20 is a good trade. Taking a trade at 50 is a good trade, regardless of the time frame. Taking a long position in hourly 20 is a good trade. Taking a long position in hourly 50 is a good trade. Taking a short position at daily 20 is a good trade. Taking a short position at daily 50 is a good trade. But if I am taking a short position telling that the candles will fall up to 20, candles will fall up to 20 in 5 minutes, then it is a risky trade. And that's why we reduce our quantity size. That's why we reduce our quantity size. Now, let me draw a support at 5 minutes 20. Now, what is this line? This line is daily 20. Please don't forget. This line is daily 20. The 43,555. Let me keep it as 43,555. So this line is 43,555. So 43,555 is basically daily 20 SMA. Now let me draw a line at 5 minutes 20. So 5 minutes 20 is here. And let me draw a line at 5 minutes 50. Now you people are going to answer me. Okay. I'm going to ask you a question. You people are going to answer me. I want you all to focus on 5 minutes chart and hourly chart only. Look at only 2 time frames. Now, when the candles are coming down, I am expecting the candles to take support at 20. Now, let's say 20 is broken down. Then I am expecting 5 minutes 50 to act as a support. Now, let's say 50 is also broken down. Okay, now both 20 and 50 is broken in 5 minutes. Now, can I expect the market to fall up to hourly 20 or not? Hourly 20 has to provide support. If hourly 20 is broken, hourly 50 should act as a support. So, can I expect hourly 20 or 50 to act as a support? Yes or no? If 5 minutes 20 and 50 is broken down, if 5 minutes 20 and 50 is broken down, can I expect hourly 20 and 50 to act as a support? Yes, right? So this is the understanding. This is the understanding. Got it? Everybody understood. Everybody understood. Very good. So that's what I'm trying to convey. Without 20 and 50, without the moving averages, it's like a rope. Okay, let's say you are going on a trekking. Let's say you are going on a trekking in a mountain. Without the rope, you cannot climb up. Without the rope, you cannot come down. So same way, whenever the market goes up or whenever the market comes down, it needs 20 and 50 SMA. Without 20 and 50 SMA, the market will be like this. You cannot understand what's happening. It will be range bound. It will be going up. It will be going down. Whenever the market is not having contact of 20 and 50, that will be the day it will be difficult for trading. Look at this day. It is not having any contact with hourly 20-50. It will be difficult to trade. Now look at this area. The candles are taking resistance from 220 and it came down. A beautiful day. The candles took resistance from 50 SMA and then it came down. The next day it was coming down. It is a beautiful trade. So now here also the candles are taking resistance. The candles are trading around 50 SMA. The next day it was a gap down. So always we need the candles to be in contact with the 20 and 50. That will give us a very good high probable trade. So here also the candles are taking support at 20 and 50 and then it went up. The candles are taking support at 20 and then it went up. Now here 20 is broken. Now 50 should act as a support. Now here 50 is also broken. Then what will happen? What will happen? Here 50 was acting as a support and here 20 was acting as a support. Here both not acting as a support. Now what will happen? The market will fall. The market will fall. So like this, it is easy for us to understand the trend. It is easy for us to understand what's happened. Now, when I went for a short position here in this candle, 20 was far below R1 and previous day high. Look at this area. When we went for a short position here, 20 was trading here. Now the market is coming below R2, but now 20 is here. So what happens? My profit booking capacity reduces. Now, in case if the market has fallen in the first area, now in case if the market has fallen here, I would have got 50 plus points in options easily. Now, since the 20 is coming up, If the market falls towards 20, my profit points reduces. My profit points reduces. So now if this candle is closing below R2, I can go for a short, but I have to reduce my points further because 20 is coming very fast to act as a support. Once the candle reaches 20, I will see whether 20 is providing support or not. Once the candle is reaching 50, I will see whether the 50 is providing support or not. If 20 and 50 is providing support, then today the market will go up. If not, the market will come down. And I will expect a short position till hourly 20. So this is our trade plan. So that's what I said. Even though the market is above daily CPR, even though the market is above weekly CPR, and even though the market is above monthly CPR, there should be some supporting factor. There should be some guiding factor. So our average price was around 235. If you remember, our average price was around 235. But our rule is if the market comes above R2, I have to run away. Because if I am not coming out in this trade, in this candle, then there are higher chances the market will go towards R3 and then it will reverse. There are higher chances the market will go towards R3 and then it will reverse. So we should not break our rules. Yes, 200 SMA also same rules only. 200 SMA also same rule. It will act as a support, it will act as a resistance. Now, in hourly chart, 200 is here. Candle has to go towards 200. But for going towards 200 also, the candle needs 20 and 50 support. Without 20-50 support, the candles cannot go up. Now again, the market is closing below R2. Okay. Now let me take a short position. Try to take a short position with less quantity again. Now look at Nifty. This is what I said. Understood, guys? This is what I said. Nifty is flying up. Now, should I take a short position in Bank Nifty or not? Yes or no? Quickly. Should I take a short position in Bank Nifty or not? Yes or no? Reason. This is what I said in the beginning of the session. When Nifty is going up, I should not take a short position in Bank Nifty. When Bank Nifty is going down, I should not take a long position in Nifty. Both are risky actually. Both are risky. Now I should not take a short. I should not take a long position in Nifty. I should not take a short position in Nifty looking at Bank Nifty and telling, okay, Bank Nifty is going down, so Nifty also will go down. Let me take a short position in Nifty. I should not do that mistake. Both are risky right now. This is where most of the retail traders are losing money. See, in stock market, remember, making money should not be the primary goal. Okay, protecting our money is the primary goal. Making money is not the primary goal. The primary goal is to protect our money and to take money from the market as safe as possible. Now, Nifty is going up without the supporting factor of 5 minutes 20-50, without the supporting factor of hourly 20-50. So what happens? It will go. It is a risky trade if we are planning to take a long position at day high breakout. No, the second candle high is broken. So if someone is taking a long position in Nifty right now, it is a very risky trade. You have to reduce the quantity. You should not deploy more than 50% of your capital. It is advisable to deploy only 25% of your capital. If your capital is 1 lakh rupee, take position for less than 25,000. It is a risky trade. Okay, at some point of time, now let's say now I think Nifty is running towards daily 20. After reaching daily 20, and or maybe after reaching hourly 200, there are chances it will reverse. There are chances it will reverse because now 200 will act as a resistance, and when going up, 20 also will act as a resistance. If 20 is not acting as resistance, then 50 will act as a resistance. So now if it is going up, no, it is a risky trade. Maybe you have to reduce your quantity and you have to plan a long trade. So these are the areas which we should be very, very careful. These are the days, both are tricky. See, nothing supports anything. Nifty will not support Bank Nifty will not support Nifty because both are having a separate fan base. Okay, both are having separate fan base. So Nifty will not move Bank Nifty and Bank Nifty will not move Nifty. Both are both have some individual character. So now this is the time we have to wait silently. We should not rush into a trade and we should not take a trade. The first trade which we took, I have explained the answer very clearly. Okay, and now if you see, we have lost only 6,000 rupee in this trade. Okay, and instead of going for 100 lots, we went for only 20 lots. So this is where a position sizing is a strength for a experienced trader. The position sizing is the key. Everybody will lose money in the market, but who will survive is the person who is handling the position sizing and risk management. See, whenever Bank Nifty is sideways, Nifty is going up or going down, or whenever Bank Nifty is going up or coming down, Nifty is range bound. Okay, those are the days we should avoid trading. Probably you should avoid trading, or you should trade with less quantities as possible. Okay, less quantities as possible. Now, what I would say is, see, everybody, you have to follow swing trading. You just give a try for swing trading initially. In your initial days, try for swing trading, and then with the understanding and experience of trading swing trading, then you can switch over to day trading, because day trading is a very big challenge. Okay, understanding the market, is a very big challenge in day trading. So uh, but whereas in swing trading, understanding the market is quite easy. It doesn't requires any active mindset like a day trader. So if you are struggling with day trading, maybe you can start with swing trading and then you can switch on to day trading. just observing the market. See, guys, I am not speaking, okay? Just observing the market. I am not speaking anything. See, because currently the market is in 5 minutes chart. Can we take a long position at 20 SMA or 50 SMA? We have to wait and see because currently the market is forming a tight range. So even though if the market comes down towards 20, I feel if this range is broken, it would be a better confirmation for a long position. Nifty is clearly rejecting from R4 levels. Clearly from R4, Nifty seems to be reversing. It would be interesting to see when Nifty and Bank Nifty both are coming towards 5 minutes 20. It would be interesting to see. So now you can understand that candles are unable to go up and candles are unable to go down without the 20 and 50. So in this session, we are not discussing anything about option selling. So let's not think about non-directional strategies or let's not think about selling options. Okay, let's stay focused on option buying. Let's not deviate our role. Okay, let's not switch our role. Our role is to focus on trend following right now in this webinar. This much of patience is needed when you focus on day trading. No, there is no use in jumping into trades here and there. We have to sit patiently until we get a proper entry. So if you look at Nifty, Fin Nifty, Bank Nifty, all are almost having a similar structure. So let's wait for some time. Let's Let's wait for the candles to come in contact with the 20, and then we will decide what to do next. Everyone, please take notes whenever necessary, because we all have the habit of forgetting things, forgetting the concepts. So maybe after 2 3 months, if you are if you want to recall, no, you will not have anything in your brain. So better write it down in your notebook so that you can refer it anytime. Maybe after 2 3 months also you can refer it if you want. So take necessary notes here and then. See, we are not trading in Nifty. It's not because of any other reason. I have been trading in Bank Nifty from 2017. So that's the only reason I am focusing more on Bank Nifty. Even though there are better setups in Nifty as well as Fin Nifty, I still try to stick with Bank Nifty because uh, of the experience of trading in Bank Nifty and handling the volatility. So almost Bank Nifty is inching towards 20 SMA. Nifty has still some steam left to touch 20. In another 5-10 minutes, we will be able to understand what's going to happen. It will be interesting to see this range breakout because this range breakout seems to be very important in Bank Nifty. So it will be interesting to see this. If this range is not broken, then entire day will be range bound. There is no point in taking trades further if the market is inside this range. So this range will play an important role today. As I said earlier, gap up and gap down market denotes unhealthy trend only. It denotes an unhealthy bull trend. So we have to be very careful. See, people prefer a futures chart for day trading mainly because to understand the premium decay. Because see, options premiums are increasing and decreasing based on futures chart only. It's not increasing and decreasing based on spot chart. That's why most of the people are preferring futures chart for day trading. Okay. Earlier, I used to focus only on spot chart And recently I started to look at future chart, just not for analyzing, just to understand the premiums, whether it will move or not. Strike price, select one strike in the money, because now the market dynamics have changed a lot. Okay, after everyday expiries and after changing the expiry date to Wednesday, the market has matured a lot. So even if you are taking 2-3 strikes in the money, seems to be sufficient. Earlier we used to take a trade where we used to take 5 strikes in the money. Okay, but right now taking 2-3 strikes in the money also seems to be sufficient. So both Nifty and Bank Nifty are right now in contact with 20 SMA. In 5 minutes, 20 SMA. So in case of 5 minutes 20 is broken, there are higher chances 5 minutes 50 will be broken. But see, taking a trade inside 20 and 50 is always risky. Whether it is 5 minutes 2050 or hourly 2050 or daily 2050. Taking a entry inside 20 and 50 should be avoided. So once 20 is broken, immediately don't go for a short. It is a risky, because inside 2050 the market can either bounce back or either the market can fall. So don't take any trades inside 2050. Either we have to take a long if there is a recovery, or we have to take a short only when 50 is broken. Now let me draw a line at 5 minutes 20 SMA, and let's wait. So right now we are having two levels. This is daily 20 and this is 5 minutes 20 SMA. So we will see what happens in this area. I don't think the market will bounce from 20 SMA. No, looking at the bear candles, looking at the range, no, I don't think bulls will take control. I am expecting bears to take control, but still, I would prefer to take a short when 50 is broken. See, Deena Dayalan, already I have said about day low. I think you did not listen properly. Sundarodivel, there is nothing like a safe target and safe stop loss. Uh, when it comes to stop loss, you have to decide how much loss you can afford to lose, which will not affect you emotionally. That is the best method for stop loss. We can say 30 points stop loss, 50 points stop loss, or 100 points stop loss. But more than that, you have to decide how much loss I can bear. Let's say you are taking 100 lots, and if you are losing 30 points, then you will be losing 45,000. Now that 45,000, can you afford to lose? You have to decide. If you are not ready to afford that much huge loss, then maybe you can trade with 10 lots, 30 points. Or maybe you can trade with 10 lots, 50 points. So based on the money which you are ready to lose, based on the money which will not affect you badly, you have to decide your stop loss. Now let's say for example, we are going for a long position at R1 and previous day high. Only for example, and let's say we are planning for a stop loss below R1 and previous day high. Okay, let's say our stop loss is below R1 and previous day high. Now here, this stop loss might be 30 points in options. Example, it might be 30 points. But we cannot say whether it will not come below 30 points or whether it will not come below 50 points. There are chances a big bear candle might form like this, and then finally it rejects. So if you have placed a 30 point stop loss, it would have hit. If you have placed 50 point stop loss, that also it would have hit. So the point here is, you have to wait for a bull candle. No, you have to wait for a bull candle, and then stop loss below that particular bull candle will be ideal, as well as the money which you are ready to lose. Now let's say there is a bull candle, and then the bull candle low is 30 points. Now let's say I'm ready to keep 30 points stop loss. But as per my money management, if I am ready to risk 50 points, then instead of 30 points stop loss, I can keep 50 points stop loss, because I am not emotionally affected even if I lose 50 points. So instead of placing 30 points in this area, I can place 50 points. So stop loss, what I have seen throughout this years is, you have to decide more than points, you have to decide how much money you are ready to lose. And it should be technically acceptable also. Now we went for a short position below R2, and then I said I will exit above, if there is a bull candle above R2, and I exited. So it should be technically acceptable as well, and it should obey your risk management also. It will come through experience. Once you are taking trades frequently, no, maybe 1 month or 2 months it will be difficult for you. But after that, after 2-3 months, it becomes a habit for you to follow the position sizing and everything. Hello. சார் சொல்லுங்க சார். So far what we discussed has happened. No, if 20 is broken and if 50 is broken, there are higher chances the market will come down towards hourly 20 as well as hourly 50 we discussed. Now 20 is broken, 50 is about to broke. Now when 50 is broken, we will wait for another 2 3 candles, because sometimes when 50 is broken, the candles will wait or consolidate for 20 to cross 50 SMA like this. So we will, at that time we will wait and then we will decide. Right now inside the 20 and 50 taking trades is not advisable, because most of the time inside 20 and 50 the market will be difficult to understand. See, the first black line is daily 20 SMA, and the second black line is 5 minutes 20 SMA. As of now, 5 minutes 20 is broken. So there are higher chances 5 minutes 20 will act as a resistance. Raghavendra, generally, when I lose 5% of my overall capital, I usually stop trading. Keeping your drawdowns in single digit is good. See, don't worry, guys. More things I will be covering. Okay. So don't worry. Hourly chart and weekly CPR is good for positional trade. That also I will cover. See, positional trade, in even in positional trade, we have two methods. Okay, the one is conservative. If you are a positional trader, let's say you are taking positional trade. Okay, there is a conservative trade and there is a little bit of aggressive trade. So if you are a conservative trader, you want conservative swing trading. So if you want a conservative swing trading, then you have to focus on daily chart with monthly CPR. Okay, and then moving averages as usual. And as usual, Dow theory. Okay, everything I will cover. If you want to be an aggressive swing trader, then you can focus on hourly chart plus weekly CPR. Okay, you have to follow the conservative method also. Additionally, you have to look at hourly chart with weekly CPR, and then SMA plus Dow theory. So everything is included. Whichever is there in conservative, you have to follow. Additionally, you have to follow hourly chart plus weekly CPR. Yeah, the trade decision, entries and exits are purely based on hourly chart and weekly CPR. Entry and exit is based on hourly chart and weekly CPR. On conservative method, your entry and exit is based on daily chart and monthly CPR. So both the things we will cover. See, generally after 2:30 we will not take any trades. So after 2:30 we will discuss a lot about the concepts. Okay, so right now Bank Nifty and Nifty is at a very important level. Bank Nifty is taking support at 50 SMA. We are anticipating that 50 SMA will be broken down. Okay, so that's the reason we are not discussing any concepts right now. I'm waiting to check whether 50 SMA is broken. Same way Nifty also. I'm expecting that Nifty will break 50 SMA. So we are not discussing anything right now. So I hope you all took notes, whichever I said so far. See, same concept for stocks. Whatever we are discussing in Bank Nifty, everything applies to stocks also. In fact, I will show you a lot of example in stocks. Don't worry. How to analyze premium decay with the help of futures chart? See, nothing much. Just look at whether the futures candles are in good size. Okay. Now, in the morning we took a put option in this particular strike price. Okay. In that case, you just look at the size of the futures candle. Okay. Now, if you look at these four candles, if you look at the four bull candles. Okay, just have a look at the futures candle also. That's all. Apart from that, I never look at anything in futures. I will never look at futures R2. I will never look at futures R3. Okay, I never look at those levels. I just look at the size of the candles, because based on the size of the candles only, the premiums move. If the size is very big, then the premiums will move heavily. Look at this bull candle in options chart. Okay, so a big bear candle in futures will lead to a big bull candle in put option. So only I look at the size of the candle in futures chart. I never look at the levels, CPR levels or moving average levels. I never look at that. Why I am thinking 50 SMA will be broken? Because already I have discussed that. Okay, whenever 5 minutes 20 and 50 is broken, there are higher chances the market will come towards hourly 20. So that's the reason I am expecting that 50 SMA will be broken in Nifty as well as Bank Nifty. Now, in case if the market is not breaking 50 SMA, and in case if the bulls are coming above 20, then I will go for a long position. Because when the market is going up, now let's say the market is coming above 20, I will go for a small long scalping. It's because now the market is taking support at 50 and then it's trying to go up. So I will make use of that small move and I will go for a long. So basically inside 20 and 50, we should not take any trade. We should wait for the 20 and 50 to be broken. So these two lines, this is 50, this line is 50 SMA 5 minutes, and this line is 20 SMA in 5 minutes, and this top line is daily 20 SMA. Okay. I have drawn three lines. Basically, these are moving averages. Nifty 50 is SMA is also very important, and 20 SMA is also very important. Surveys, already I have answered this question. Okay, please don't ask me the same question again and again. Market dynamics have changed. Everyday expiry is there. Okay, Bank Nifty expiry has changed. So instead of choosing deep ITM, I am choosing ITM or at the money. Okay. So don't ask me again and again. You can see there is nothing wrong in choosing at the money. There is nothing wrong in choosing in the money. There is nothing wrong in choosing deep ITM. As far as you are not choosing OTM for day trading, it is good. Okay. Earlier, I used to take 5 strike prices or 3 strike prices deep in the money. Right now, I am taking only 1 strike price or 2 strike price deep ITM. In fact, sometimes I am choosing at the money strike prices only. It's because the market dynamics have changed. I am observing the move in options. So I feel this is sufficient. Okay. Please don't ask this question again and again. If you want, you can choose 5 strike prices in the money, no problem. If you want, you can choose 3 strike prices in the money, no problem. If you want, you can choose at the money also. So that's not at all an issue. Please make sure you understand the concepts well. I think before the market breaks 5 minutes 50 SMA and before the market comes down, I think hourly 20 will come up. Because now the hourly 20 is coming very fast towards hourly candle. See, forget about my YouTube videos. After coming to my course, after joining my course, forget about Elon Market's video, forget about YouTube videos, forget about any other platform videos. Okay. Because whatever I say in YouTube or any other platforms will be a very, very basic stuff. For you, it might be a big wonder, but according to me, those are very basic stuff. So don't tell you said in your YouTube video like that, like this. Those are very basic ABCD stuff. Is trading inside this range. So let's wait. There are several days the market will be inside 2050 and then the direction will not be very clear. Even if you look at the previous day, the market was inside 2050. There is no point in taking trade. You will go for a short position, the market will go up. you will go for a long position, the market will come down. So it's better to wait and see whether the market is coming above 20 completely or not. If the candles are coming completely above 20, then you can go for a long scalping. In case if the market is coming out of 50 SMA like this completely, then we can plan for a short scalping. So I've observed this several times. Whenever the candles are inside 2050, no, the trend is not clear at all. Okay, so we have to wait and we have to take a trade. Many days. Okay, so it will be very tricky. Okay, even here the market broke 50 and then quickly it reversed and then it came down. So the market will be very tricky inside 20 and 50. So we have to wait very patiently. Even over here. So many days, if you observe inside 2050, the market will be very, very tricky. Even over here, the candles are inside 2050 on 27th October. So it will be very, very confusing and it will be very, very difficult. So we have to wait. As I said earlier, if Bank Nifty closes above 5 minutes 20, and if the candle is satisfactory, then I will plan for a long scalping as well. Now I'm expecting the market to come towards hourly 2050. I'm expecting the market to come down towards hourly 2050. Now, when the candles are closing above 5 minutes 20, I will plan for a long scalping. Now, you might be confused. I am going for a short in 5, as per hourly chart, I am bearish, but as per 5 minutes chart, I am going for a long. See, in 5 minutes chart, based on 5 minutes 50 SMA support, the market can come up. And that will be for a temporary period of time. Maybe it will go up to R2 or R3, or maybe it will go up to first candle high. It will be a temporary uptrend. I'm making use of that small temporary uptrend for my scalping. But on the bigger picture, only if 50 SMA is broken, only when 50 SMA is broken down, my view for candles to reach hourly 20, my view for candles to reach hourly 50 will be activated. Okay, right now, my view for hourly 20 and 50 is not activated because 50 SMA is not broken down. 5 minutes 50 is not broken down. Once 5 minutes 50 is broken down, my view will be activated. After that, I will be a strict short position trader. I will take strict short positions only. Right now, 5 minutes 50 has provided necessary support. So in case if the candle comes above 5 minutes 20, I am planning for a long scalping. Anywhere I will scalp between 30-40 points and I will run away. Pickpocket. That's all. A day trader's job is pickpocketing the points from Bank Nifty. Just do some quick scalping. Don't expect huge profits, huge money. Just do pickpocketing and run away. That's all. Whenever CPR is narrow, of course, we can expect a trending day. Today, it should be a trending day. So we may get a trending day in the afternoon also. We cannot say market should be trending in the morning. We cannot say market should be trending throughout the session. We cannot say like that. Whenever there is a narrow CPR, be ready. Be ready, be cautious, be alert. Anytime trending move can come. See, catching 10-20 points inside a risky range is not advisable. Okay, it's like you are keeping your hands between the train wheels and you are taking out. Between each and every train wheels, you are keeping your hand and you are taking out. It's risky. Okay, let the market come out of a risky zone. See, right now the market itself doesn't know where it should go. Where it should go, the market itself doesn't know. Only when the market comes out of 20 or 50, the direction will be clear for the market itself. So inside a deadly range, inside a strong range, why we should take that risk? The distance between CPR S1 and CPR R1 it's okay only. Yesterday it was very high. If you compare yesterday and today, yesterday the range was very, very big. So the market was also in a dead range bound manner. But today the range is very small only. So we can expect a trending move. Just look at the distance visually. That is enough. See, even though now 5 minutes 50 SMA is broken, but previous day high is acting as a support, can I take a short position or not? Now, generally, when I take a short position when 5 minutes 50 is broken, I always prefer 5 minutes 20 also to come down. When 5 minutes 20 also comes down, and then if the market is below 50, I will go for a confident short position. Because we want 20 also to come down. Whenever the market is bearish, 20 should be below 50 SMA. Now look at daily chart. In daily chart, 20 is below 50. Look at this area. Candles are 20 is above 50 SMA. In the beginning of October, 20 was above 50. And look at the candles. They are range bound. They are not at all falling properly. There is no straight fall. But after 20 crossed 50 SMA, look at the straight fall. So there is a difference in each and every move of moving averages. There is a meaning for each and every movement of moving averages. So, like daily chart, imagine 5 minutes. If candles are coming below 50, then the move will be range bound and it will be difficult to